Hello all, this is Omkar Gadgil. Friends, we are now coming up with this new video on the key points and the amendments and the errors to be avoided while filing of the GST annual returns and the GST annual reconciliation statement under the form GSTR 9 and 9C. The GSTR 9 and 9C for the financial year 21-22 is due to be filed on 31st of December 2022. That is, the due date stands as on 31st December 2022. We have tried to compile the amendments and the key pointers on the basis of each and every specified table of this GSTR 9, which will probably help you to analyze and also go in a bit of a intricacy in regards to the filing of this annual return and the annual reconciliation statement. What we have tried to do is that based on every table of GSTR 9, we have the GSTR 9, we have tried to divide this discussion into three parts. Wherever there is a relevance of the table, I'll also try to show you the table as and when it is required so that it will be easy to correlate the same. So let's start discussing the same. Now, first of all, the statutory provisions which talks about the applicability of the GST annual returns and the annual reconciliation statements for the financial year 21-22. Now, friends, as far as the amendments were made in the provisions of the annual return under section 44 of the CGST Act, the section requirements under 35 subsection 5 which required the audited reconciliation statements has been withdrawn, and therefore for the financial year 21-22 you will only have a self-certified GSTR 9C to be uploaded. So who is required to mandatorily file and who is not required to mandatorily file the returns? Let us first try to look at that. As far as the aggregate turnover of FY 21-22 is concerned, if the turnover is less than or equal to, now I'm being very specific on the term equal to, because everywhere the words used are exceeding 2 crore, exceeding 5 crores. So I say this way, if the turnover is less than or equal to 2 crores, the aggregate turnover is less than or equal to 2 crores, filing of GSTR 9 is not mandatory. Filing of GSTR 9C is also not mandatory, but yeah, the option is open. Now, why do I say that the option is open? If at all there have been certain changes that you would want to do in the returns that you have filed on the monthly basis, if you want to report some mistake and by way of that you want to rectify the mistake, the forms are absolutely open for you to do those reportings, and therefore you are allowed to file it even though it is not mandatory, meaning thereby if the aggregate turnover of a taxpayer is less than or equal to 2 crores and if you don't file the annual return and the 9C as well, there is no legal action which can be initiated against you for doing that, as there is no non-compliance. If you wish to still go ahead and report certain fallacies which have been occurred, you may very much go ahead and file this GSTR 9 and 9C, which will give you an additional opportunity to rectify the mistakes and have it presented before the GST authorities. As far as the turnover exceeding 2 crores but less than or equal to 5 crores is concerned, if the aggregate turnover is in this range, then GSTR 9 becomes mandatory, but GSTR 9C still remains optional to be filed. And if the aggregate turnover exceeds rupees 5 crores for the financial year 21-22, then GSTR 9 as well as GSTR 9C is mandatory, meaning thereby wherever we have used the word mandatory, if those returns are not filed by the taxpayers for whom the turnovers and the returns are applicable, then there will be the legal actions and consequences of that by way of penalties, by way of late fees, etc. Now we'll go to the GSTR 9 form. At the same time, we'll also see the GSTR 9 form available with us over here. Now friends, we want to specifically look at this GSTR 9C form, I beg your pardon, GSTR 9 form, and table wise we'll have a look at it. Now the first part is of course about the basic details, and therefore I'm skipping the same. We'll go to the table 4, which talks about details of advances, inward and outward supplies made during the financial year on which the tax is payable. Now, because we are going ahead with an assumption that we are not right now going for a clause-wise analysis of the table, we are only looking at the specific table, the key pointers for that specified table, the amendments and the errors to be avoided. So, I have only shown you the table 4 of GSTR 9, which talks about details of the outward supplies and advances received and the inward supplies on which the taxes are paid. Under that table, what we are supposed to report is what is given in that heading, and here we are going to discuss about the key pointers and the amendments and the errors to be avoided. Now the key pointers for this table is that whenever the turnover is to be reported in GSTR 9 table 4, it will be auto populated when you open the form on your GST portal. This has the auto-populated data which has come from the GSTR1, which has been filed for the entire financial year 21-22. So whatever GSTR1 return was filed, whatever were the amendments made during the year, netting of those transactional values, you will get the value in GSTR9 table 4 as an auto-populated value. Now, if the turnover which has got auto-populated in GSTR 9 table 4 is actually in line with your books of accounts, then there is absolutely no need to worry, no changes to be made. If, however, there are certain changes that you feel that in the books of accounts you have certain data which has not gone and got reported in GSTR 1 and therefore it has not auto-populated in your GSTR 9 table 4, in that case you would be required to make those changes as this table is able to be edited in the required manner. So if the turnover differs from the actual books of accounts turnover, then kindly update that much of turnover. Now friends, there are two possibilities. You might have filed GSTR 1 wrongly, but GSTR 3B was filed correctly and it is in line with the books of accounts. Meaning thereby, the taxes have been actually correctly paid. The GSTR 3B return is actually in line with the books of accounts. Only GSTR 1 was filed incorrectly. Then the table 4 figures will only be updated, but there will be no tax liability again to be paid because the taxes have been already paid in your GSTR 3B during the year. If the second variety is that GSTR 1 also does not have that figure, GSTR 3B also does not have that figure, but only the books of account have that figure, then you need to update the table 4 of GSTR 9 and the taxes paid amount should be considered to be liable to be paid along with this annual returns which you need to pay through the DRC03 challan, and the specification of the same would be considered as a tax payable along with the return. Now there is a problem over here is that if you do not have a specified table in GSTR 9, friends, I have a very simple mechanism out over here. Since GSTR 9 does not have a specified table to add any comments, in that case, and if you do not have GSTR 9C applicable as well, we follow a simple methodology is we report that much of excess tax paid by way of a letter after filing of GSTR 9 and we hand it over to the department, which just secures the additional record submission, although there is no such mandatory requirement. Now, if the turnover in GSTR table 9 table 4 gets updated and it is in line with the books of accounts, then there is nothing more required to be done after that. Importantly, very importantly, if there might be certain exceptional industries where your books of accounts and the GST data will never come in line. For example, we have construction industries, we have the EPC contractors. Reason being that since the accounting transactions of record are recorded for these industries on the basis of the standard accounting policies, which such as revenue recognition on the basis of percentage completion and so on. And therefore, in such cases, the GST transactional data which has been reported in your returns on a monthly basis will be the only basis for comparing. So what you can only do is, for let's say in case of real estate construction services, try to compare the actual demand letters issued, try to compare the money received by way of advances, and that will be the only data in table 4. Since there is no point in matching that data with your books of accounts, since the books of accounts will have a totally different value, since that will be on a different basis of recording, which is percentage completion basis, whereas you would be recording the transactions under GST on the basis of time of supply. So I hope that this particular point is clear. We'll move further. The data which is there in table 4 should only consist of the data which has been reported during the period April 2021 to March 2022. The turnover, the debit notes, the credit notes, everything needs to be reported in, especially that period which was actually done. Means if you have issued any credit note subsequently, if you have issued any debit note subsequently, then the same would not be a part of this. Only the debit notes and credit notes which are in regards to those outward supplies which have been made during this period 21-22, only those records should be reported over here. Now, the reporting of credit notes, debit notes, amendments. Now we are going to the amendment part of it. The reporting of credit note, debit notes, and amendments which were made during the financial year 21-22 till last financial year, it was allowed that you could just net out the turnover of, say, gross turnover minus credit notes, add back debit notes, minus amendment plus amendments, and you just report one single value. As per the instructional changes, I mean the changes in the instructions made via the notification issued on 5th of July 22, the rules were amended, and now the instructions say that the reporting of credit notes, debit notes, amendments which are made during the financial year 21-22 are to be separately reported and they cannot be netted out as it was allowed till the earlier years. A couple of errors that need to be avoided is, I would like to say over here is, please ensure that the classification of turnover on the various heads like B2B supply, B2C supply, zero rated supply with payment of IGST, SEZ supply with payment of IGST, and deemed exports transactions, all these turnovers should be actually on the basis of the bifurcated turnover as you have reported during the year. Friends, the only thing is that in the long run, if you see there is any litigation based on the refunds which have been granted to you, there is any litigation on the basis of any turnover to be explored, and if your annual return gives a very clear picture of the bifurcated turnover, that will always be in the interest of the taxpayer, and therefore it is relevant that such interclassification values should also be ensured to be reported on the actual basis. They should not be having any fallacies in regards to the inter head reporting, or it should be rather, I would say, avoided to the extent possible. It should be avoided. The advances should contain the advances for services only outstanding as on 31st of March 2022, because any unadjusted advances will be a part of it, yes, and the advances which are outstanding as on 31st March 22 will only be reported under the head advances. That means, let's say that there was some advance received in July 2021, but the invoice against such advance was already issued in the month of September 21. Then that advance has got netted out and it has got reported and adjusted against the actual turnover reported. So we have to be very careful in this regard, that the advances against services. Now I'm being very specific about services because the tax under time of supply is liable to be paid only on the advances received against supply of services. Supply of goods related advances, the taxes, the same was suspended from 13th of October 2017, and the same does not exist any further. Let's move to the next table, that is the turnover of the exempted supplies. So friends, we are now referring to this particular table from the GSTR9, that is table number 5, details of outward supplies made during the financial year on which tax is not payable. Here again, the outward supply should be matched with the cumulative total of exports, SEZs, non-taxable supplies, non-GST supplies, everything which is there in your books of accounts. Relevance being, if there is any working of Rule 42, Rule 43, that is proportionate reversal of input tax credit, common usage of input tax credit for taxable as well as exempted supplies, there the value of exempted supplies, what you have taken under that calculation, should be matching with it. So it is necessary, essential to have a specified detailed working in this regard and report the same. If there has been any mistake in GSTR1, please rectify the same interclassification of the heads. The same needs to be rectified. So this is very relevant and this is very important as a data to be maintained for future references. The turnover, the amendments in this regard are turnover of non-GST supply is to be specifically reported separately, whereas the exempted and nil rated may be merged and reported only under the head exempted. So the turnover of non-GST supplies over here specifically means those supplies, let's say supply of alcoholic liquor for human consumption, supply of petrol, diesel, kerosene, out to out supply, bond to bond transfer, then high sea sales, all these non-GST supplies should be specifically reported in a separate tab, which is having non-GST supply as a tab, which is available in this return table number 5. You can very much see over here under 5F, there is a non-GST supply tariff. The exempted and the nil rated may still be permissibly merged under the exempted category. But friends, I would specifically say now exempted means specifically there is a rate of tax applicable in the rate schedule. However, currently there is an exemption notification which is making it exempted. Nil rated means those goods or services which are currently appearing under the 0% category, which are nil rated. As in this particular year also, you are allowed to merge the exempted and nil rated supplies as a part of the amendments, and you can report them commonly under exempted supplies. The option to net out the turnover with credit notes, debit note amendment, as I told you in table 4, same applies over here, that the credit note, debit notes against the exempted or non-taxable supplies should also be reported separately. In reporting of the turnover, the correct values, like I said, the interhead bifurcations is very, very essential, and the same needs to be taken care of, that you are maintaining that caution point that the turnover of zero rate supply should not go into SEZ should not go into the exports. It is relevant because, as I said, in the long run, when the return values will be compared, if there are any points in litigation, these things will be by your side to help you or to strengthen your litigative position in regards to the compliance which is made or the correctness in the compliance which is made. Again, the GSTR1 auto-populated data comes in table 5. So if there are any mistakes made in GSTR1, the auto-populated data should be edited accordingly and the correct turnover, correct value should be reported. Of course, since here there is no question of any tax, we are not going to make any comment on that since it is a non-taxable supply category table. Friends, the next we are going to refer is the reporting of the input tax credits. Now, as far as this input tax credit goes, in your GSTR9, the same appears in table number 6, details of the ITC availed during the financial year. Here, what the data comes is a auto-populated data from GSTR3B. Now, table number 6 is for input tax credit. Remember, input tax credit we claim through the GSTR3B. So, the auto-populated data comes through GSTR3B, cumulative data. Please remember, this table is not to claim a credit which you have missed to claim. GSTR9 table 6 is never to be amended, is never to be changed, because that is only giving you a reflection of the actual returns credits that you have claimed during the period FY21-22. So the only duty of ours over here is to reclassify the credit into the various heads, such as inward supplies other than reverse charge, inward supplies by reverse charge, inputs, capital goods, input service. This bifurcation is what we are supposed to do. Now, what do the amendments say? Capital goods credit needs to be specifically disclosed separately. There was optional reporting earlier that you could merge everything under inputs. No, only the capital goods credit, the credit which has been claimed on capital goods, should be specifically disclosed separately. Input and input services credit can be merged under the head inputs or input service, as the case may be. Now, friends, it is easy to track the credit of capital goods which has been availed during the year, because you can simply go to the fixed asset schedule. You can find out how much is the addition during the year and what are the assets which were added during the year, and only the credit on those assets can be disclosed under the head capital goods. Very important. If there was any credit of FY20-21 which was claimed during the year 21-22, please ensure that you are reducing that much of amount from this. I mean, you are allocating that much of amount of this under the table 6 and the row M over here. Any other ITC availed but not specified above. Now, why I am saying so? See, ultimately, when the input tax credit which is availed during the year is going to be compared with how much was the input tax credit available as per GSTR 2A or 2B, of course, those invoices which were pertaining to 20-21 are not going to appear in my 2A, 2B of the current year. And therefore, I need to compare only that credit which pertains to the year 21-22. So, while classifying this amount needs to be specifically reported under 6M. There's no much question of transitional credit in for 21-22, so we are just keeping it aside for the while. Any bifurcation of the credit To the extent possible, please give it and please report it. I know it's a bit of a tedious job to do that, but if it is available, there's nothing like it if you are able to give that filtered report. Like I said, the amendment stresses upon capital goods credit to be reported separately. The next that we're going to discuss is any input credits which is claimed for the previous year. Like I said, it has to go in 6M. Any input tax credit through ITC02 should also be reported under 6M. Now, when I am referring to ITC02, it means there was a merger between A Limited and B Limited. Okay. We are filing the annual return of B Limited. So B Limited electronic credit ledger has been hit with a extra input tax credit which has come via this merger activity. As permitted under 18 subsection 3, availability of credit under special circumstances, we are allowed to claim that credit in case of merger or any other such arrangements. ITC02 was filed and the recipient entity B Limited is entitled to this credit. It needs to be also disclosed separately, since this data will also not be available in your comparatives of GSTR2A, since it must have gone to the merged entity. And therefore, this amount should also be reported under 6M very specifically. So as I conclude table 6, please ensure there is no new credit claiming possible through this table. Only the bifurcation of the data which has come as auto-populated data over here in table 6A, that needs to be only bifurcated and reported. And any credit of the year 2021 as well as any ITC02 enabled credit should be going under this table 6M. Next, friends, we would be discussing on the table GSTR9 table 7. This does not come auto-populated, so we have to fill this data on the basis of the actual reversals that were made during the period 21-22. Now, it is possible that in this reversal which you had done during the year 21-22, if it is as per rule 37, 39, 42, 43, that means non-payment within 180 days, or it is the credit for banking companies, or it can be the common credit for rule 42, 43. If you have done the actual reversal during 21-22 which pertains to the period 21-22, that will be reported under this A, B, C and D of table 7. If there is any previous credit reversal, that means reversal of some earlier period, please ensure that you are specifying that in other reversals. Under 6H, you have an option to specify the reason for that. You can still put that value over here. Now, as far as section 17.5 is concerned, now there is a catch over here. If you don't avail the input tax credit which is under the blocked credits category, since your accounts are expensing it out already, please do not mention any amount over here, otherwise it will reduce your actual eligible credit. If you are availing the amount which is under 17.5 and then you are reversing it separately, then that means your table 6 has been updated with that value and table 7 will reduce that value. So there is going to be a same position. But please ensure if that 17.5 amounts is not being reported by you anywhere in the return, if you have not claimed it in the gross amount in table 6, please do not reduce that amount. Otherwise, your net credit will be going down as compared to the actual credit that is available to you. So it is relevant that 17.5 reporting will only happen if you have specified that amount in the upper side, that is in table 6, and then you can reduce it, no problem. If you have already reduced your table 6 to the extent of the block credits, please don't reduce it over here, otherwise there will be a double reduction. Alright, then next we move to this. Apart from the reversal under tran 1, tran 2, all should be reported under other reversal, is that what has been mentioned in the amendment part of it. The next table we are going to discuss will be table 8. So now over here, table 8, as you know, it is the comparison of GSTR 2A and 2B. I know that many of you are facing notices for this specific table. ITC as per GSTR 2A will be auto-populated. Now there might be a question that for the period April 21 to December 21, there was a GSTR 2A. From 1st January 2022, since the provisions of section 16 subsection 2 clause AA were made applicable, the input tax credit was required to be restricted to the input tax credit available under GSTR 2B. So might as well for the period January 22 to March 22, you may have to use the data of GSTR 2B. So what comes auto-populated is really a matter of intricacy that we need to see that GSTR2A consists over here. When this table 8 reflects the value of GSTR2A, is it just the 2A or it is 2A plus 2B? Means that if for January 22 to March 22, there might be the figure of GSTR 2B only. Now the ITC is, this amount is going to come from your table 6, and therefore as I said, table 6 bifurcation is very very important. Table 6B is about the inward supplies other than reverse charge. Table 6H is about the amount of input tax credit reclaimed other than the above under the provisions of the act. That means, let's say you had reversed some credit for non-payment within 180 days in the month of November 21, you again availed that credit in February 21, so that means it is a credit pertaining to the current period, so you have to put it in 6H. That 6B plus 6H will get auto populated over here. Thereafter, any input tax credit which has been claimed, which is pertaining to the period 21-22, but which was claimed from April 2022 up to 30th of November 2022. Now I know that we are talking today on 24th of November. Still I'm talking about 30th of November because the provisions underwent amendments, and the amended provisions removed the connection of that September due date, and now the dates have been replaced as input tax credit which has been claimed up to 30th of November. So friends, please ensure that your table 8C should consist of data of all the credits which have been claimed pertaining to FY 21-22, claimed during the period 1st April 2022 to 30th of November 2022. That will come under table 8C. Again, it is only on supplies other than imports and RCM supplies. So here your data will get updated, and then if the difference is positive, that means if your GSTR 2A credit is more than the GSTR 2, that means the GSTR 9 table 8B plus C, then the difference will need to be either considered as not available or it has to be ineligible, and therefore it will be lapsed forever. The IGST, if at all there is a reverse scenario, that means the credit available with you is more than what is there in 2A. Of course, you know that there are litigations pending on that, and therefore I'll not specifically make any conclusive comment. Yes, we are fighting certain points where we know that for sure the genuine purchases existed in the time prior to 31st of December 2021, because it may not be appearing in the GSTR 2A. But as far as FY 21-22 is concerned, you can still challenge the credits for the period which are not appearing in 2A for the period April 22, beg your pardon, April 21 to December 21. Since from January 22, we had no choice but to claim credit only as per 2B, since there was a legitimate legal provision. January 22 to March 22, no recourse on that. But prior to that, if there is any amount which is not appearing in 2A and therefore it has not got reported over here in 8A, you can still go ahead and claim the negative difference, and that will be something which will come under as a part of your scrutinies and notices. As far as the IGST paid on imports is concerned, this same will be reported in this particular table. Now, I am not particularly going through each and every point, since like I said that we want to keep this discussion limited to only the key pointers and the errors to be avoided along with the amendments. We have been doing the clause wise analysis separately, so there will go of course for every table, every clause in that particular videos. Now, the table number 9, very importantly, as I said that again, this table is auto-populated. Of what it says is details of tax paid as declared in the returns filed during the year. Now friends, again, I'm being very specific over here that table number 9 is coming from your auto-population figure of GSTR 3B. Means your payment summary for the entire year gets reflected in table number 9. Unfortunately, the fields are editable, but it is my very, very clear and professional view that this table should also not be edited. Whatever is the actual tax paid, that has to remain as it is. No changes shall be made in table number 9. If the table consists of tax for the previous year, then that should be specifically disclosed in your GSTR 9C. You have a table for rate-wise reconciliation. You can show it over there separately. For those taxpayers for whom only GSTR 9 is available, but the summary of difference shall be submitted, like I said, by way of a voluntary letter. Means what will happen is your table number 9, let's say, reflects a tax paid of 10 lakh rupees. But after making the turnover in line with the books of account, you realize the tax payable was 11 lakhs. So your table number 4 has got updated with a tax amount of 11 lakhs. But table number 9, which is about the tax payment table, shows only 10 lakhs. Like I said, friends, this 1 lakh rupees, you have realized that it has to be paid now. You are paying it now. Please, like I said, pay it through DRC03 Chalan. Report it separately to the officers if you don't have GSTR 9C. However, if you have GSTR 9C, nothing like it. You can make that specific comment in the rate wise reconciliation table under 9C. Table number 10 to 13, yeah, there are a few amendments out over here. For the financial year 21-22, the part 5 consists of the transactions for the previous year. Now, this very notification, as I have mentioned in the, I mentioned this particular, I have prepared this particular presentation just 3 days or 4 days before. But I think it was on 19th of the November or 20th of the November that the circular has already been issued by the CBIC that what you are supposed to report in table number 10 to 13 is all those transactions which were reported in the GSTR 3B returns from the date 1st of April 2022 to 30th of November 2022. All those transactions will be here. So this particular comment may be ignored, that concern of this September date, because now it has been very much clarified by CBIC. The amendments say that the particulars of this demands, refunds as which has been demanded in this table number. So now I'm just taking you through table number 10, 11, 12, 13. Here supplies declared through the amendments or reduced from amendments, credit note, debit notes reported. All these datas which were reported from 1st April 2022 to 30th November 2022 will be reported over here. Only a transactional data which is pertaining to 21-22 but reported over here, availed credits, reversed credits, everything comes over here, which was from 1st April 22 to 30th of November 2022. I hope this point is clear. We move further. Table number 14, differential tax paid on account of declaration in 10 and 11 above. Now friends, if this particular thing exists only if your taxes payable and paid are as per the table number 10, 11, 12, 13, means you missed to report certain values, you have reported in the period April 22 to 30th November 22, then that amount will come, and of course it comes through these tables over here. So if you are reporting something over here and those taxes are already paid, then you have to put it in payable as well as paid. But like I said, if you are filing your GSTR9 after 30th of November, which is more, I mean obviously bound to happen, if when you are going to file this GSTR9 and you realize that okay, there was some tax which was not paid, like I said, we are paying it through DRC03 today after 30th of November, then that amount has no space to be reported over here. So for people on for whom GSTR9C is applicable, please show it in the in the rate wise reconciliation and give a comment separately along with the reference of Chalan. For people for whom GSTR9C is not applicable or not mandatory, you can please write it to the department that the short paid taxes has already been paid, since they were not accommodated even over here. ओके, सो आई एम सेइंग अ सिनेरियो 10, 11, 12, 13 में रिपोर्ट करने का टाइम अगर चले जाता है, उसके बाद आपको कोई लाइबिलिटी मिलता है, तो आपने टेबल 4 को अपडेट करना था जो हमने डिस्कस कर लिया, एंड ओवर हियर you are going to make that payment of tax. But since it is not able to be reported over here, please report it separately to the department. And for 9C people, of course, in the rate wise reconciliation liability statement. The last amendment out over here in GSTR 9 is the particulars of demands, refunds, etc. is not required to be compulsorily reported. It is optional. Again, data of supplies which are made from the composition taxpayers, deemed supplies to the job workers, and goods sent on approval or return basis. Again, to your relief, these tables remain optional reporting tables. Now, friends, somewhere this year the problem with tax audits was also about that reporting of data under clause 44 of tax audit, and therefore it was expected that certain data which was asked to be reported over here could have been fetched from these particular returns or this particular tables. But here these table number 15 and 16 continued to remain optionally reported, and therefore you have to separately work hard for that clause 44 data. Now the HSN summary under table number 17, something interesting over here is outward supply of HSN summary. For the taxpayer whose turnover exceeds rupees 5 crores, HSN summary is compulsory. Up to 6 digits HSN code summary is compulsory for those taxpayers having a turnover exceeding 5 crores. For those taxpayers having a turnover between 2 to 5 crores, the turnover of B2B supplies HSN summary up to 4 digits is required to be reported mandatorily. Means for taxpayers having turnover in excess of 5 crores, 6 digit HSN summary compulsory for the outward supplies of B2B, B2C, all supplies. For the turnover, for the taxpayer having turnover less than 5 crores, the HSN summary up to 4 digit is compulsory for all B2B supplies. This is the amendment for the current period. For table number 18, that is HSN summary of inward supplies, it remains to be optionally reported. But going forward, yes, please be ready for this table as well. For the FY 21-22, this table is optional. Friends, as far as GSTR9 is concerned, the primary points are completed. We'll go only and discuss the brief aspects of GSTR9C. The input tax credit of the previous year, which is availed in the current year, and current year credit availed in the subsequent year, is to be reported separately. So we'll quickly go through that table where there has been an amendment. Remember, there were a lot of optional reportings under GSTR9C in the earlier period. The same have continued to exist. However, there has been a specific change or the specific amendment for reporting over here that we can refer to in table number 12 of GSTR 9C, reconciliation of net input tax credit. Here the table of previous period the credit of previous period claimed in current year's credit claimed in subsequent year, and the current year's actual credit. This bifurcation is to be now compulsorily given as a part of amendments. The rest of the tables remain to be reported, means you may report the consolidated turnover, you may report turnovers under the category optional reportings as it was there in the earlier years. That has continued, and therefore I have not gone very specific as per the clauses since there is nothing specific to be amended over there. There are a few points that GSTR 9C data, as much detail as possible, please report it, because as I said, in the long run, it will be very helpful. So we'll quickly take a glance through the turnovers which are to be reported, or the data which is to be reported in GSTR 9. The audited turnover of that specific state for which this 9C is being filled. So especially for the entities having more than one registration, you can report this data from your actual books of accounts over here and bring it in line with the GST returns by way of a reconciliation. To the extent possible, please ensure that the data of the unbilled revenue, unadjusted advances, unbilled revenue at the end of the year, credit notes, debit notes, all gets reported over here to the extent possible in a detailed manner. Very importantly, when we come to this rate-wise reconciliation of tax, like I said, if there is any short paid tax, because see, this data is compared as to the rate-wise reconciliation that you report in the returns vis-a-vis what is appearing in the books of accounts. So if there is any discrepancy in that, and like I said, if you have paid any tax today, that will come over here along with the reasoning in this table. Friends, as we had a problem in this GSTR 9C in all this period about the detailed reporting of the rate of the headwise bifurcation of credits, again, it remains optional. It will be in your best interest to bifurcate this data and report it. That is what I would only say. But there is no mandatory requirement defined as yet. As much reporting in the detailed manner in 9 and 9C, I'm sure that the parallel issues in the reporting of Income Tax Act under clause 44 for tax audit can be avoided. Detailed reporting to the extent possible by ignoring the options which are available will only help you to have a very filtered reporting of data. Wherever the optional tables are there, optional reporting continues. Wherever there are mandates that those particular tables are to be mandatorily filled, as we already discussed. So friends, on this lines, I would like to thank you all for this patient listening. For any queries, kindly feel free to reach out to us on the given email IDs and on the given phone numbers. Thank you so much for this listening. Take care. Jai Hind.